Hi and welcome to Symax Fintech weekly report. This is part one, which is a macro market overview covering last week and this week. First of all, disclaimer, boring I know, but something that's really important is the fact that trading involves the risk of loss of capital and of course is not suitable for everyone, although we hope it is for you. Many companies provide leverage, so you need to be aware that you can lose substantially more than your initial investment. Any news, views, opinions, anything that's involved in these is just purely for educational purposes. It does not constitute investment advice and it's not a solicitation to encourage you to trade or invest. Of course, you should carefully consider the risks, your financial situation, definitely your level of experience. And of course, you should only risk capital you're prepared, but more importantly, you can afford to lose. Hopefully, you won't. And of course, you should seek independent financial advice if you've got any doubts whatsoever. And please do that before you risk your capital. Last week we saw central banks hiking again. That includes the Bank of Australia, which was a little bit of a surprise one for some. And then, of course, the Fed doubled its rate from 0.5% to 1%, with the promise of more to come. And the Bank of England raised theirs by a quarter to also be at 1% with more to come. For for the UK, maybe less overall than the Fed. And then, of course, on Friday we had the NFP. Was probably again a little bit of a surprise for some people, a little bit higher than expected, 428,000. You know, considering how tight the jobs market is, it was a good number to come in. Although 3.6% unemployment, there was expectations that that could have dropped to 3.5. Job vacancies, there's 11.5 million jobs available. And when you ratio that to the amount of people that are unemployed, it comes out at 1.8. Stocks fell, and of course, without the central banks there to support the markets, uh, investors are more cautious, they're more concerned about high inflation, and of course, these interest rate increases. Japan saw their inflation hit 30-year highs. And of course, in the UK, we had local elections, which punished Boris and his government. The pound is weaker, and we just have to wait and see how the UK economy goes. But it's not looking great at the moment, I must say. This coming week, the data that's due out, or the main data, there's plenty of it this week, but the ZEW surveys for the EU, CPI, also Lagarde is speaking. In the US, of course, we've got more inflationary data with CPI, PPI, and that consumer sentiment. People don't pay enough attention to consumer sentiment. You know, we account for 70% generally of an economy. So if we aren't confident, then we're not going to spend as much. Also in the UK, we've got GDP coming out, and in China, again, more inflation figures with CPI coming out. So the macro outlook hasn't really changed since last week. Inflation, shrinkflation, you know, where things get smaller, but you're still paying the same. Stagflation, which is basically, you know, higher prices, but without growth, or a recession. And those things are on the horizon. So we'll have to wait and see. Inflation we've still got. It's not shrinking at all at the moment by any means whatsoever. And supply chain issues, obviously with China lockdowns, that's causing problems, which is again pushing that inflation up. Part of it is demand, but the majority of it's from the supply side. And with the lockdowns for China, it's very difficult to get those supplies out. Russian invasion of Ukraine also has pushed up food and energy prices. Again, as I mentioned, there's a lack of workers, which is putting pressure on earnings. So companies are having to pay more to try and attract the staff. We've got some EU states that are probably heading for stagflation or a recession. Not quite yet, but you know, maybe we're going to start to see some more positive signs of that. Sort of, I won't say positive or negative there, but positive signs that they are heading in that direction. And of course, this is making the ECB sound a bit more hawkish, and we should expect probably to see some rate rises this year, possibly summer being the first one, but just a guess, but we'll have to wait and see. Ukraine better equipped for the war at the moment. They're receiving a lot of armaments from abroad, which is helping them. And in some areas, they're even going on the offensive. So just a quick trading tip of the week for you guys. This is about when you're trading near highs or lows. That, you know, when you are trading near a high or a low, if it's stocks, it's probably been more the lows recently. You know, you've got to consider when you're taking on a position near that where you're going to place your stop loss. And you know, it could be that once you've worked out your financial sort of maximum that you're prepared to lose in that, using your risk reward ratio, hopefully, that you're going to enter a trade that's going to sort of basically stop you out near or very close to the current high or low. And of course, you don't want that to happen. You want to avoid that because you know that level's held before, and you know that could hold again, and therefore you want it to really break that existing high or low. Of course, you've got to measure how much that's going to cost you. So be careful with that before it triggers your stop loss. And therefore, make sure that you calculate how much you could potentially lose in your trade before you get into it. And of course, there's nothing worse than being stopped out at the high or the low of the day. So just think about that, just analyze and just check it before you go into those positions. Again, our disclaimers there, just so you can read it. Take your time, make sure that you understand that trading does involve the potential risk of loss of capital, not suitable for everyone. And of course, you can lose substantially more than your initial investment. The views I've provided here are just mine, and they're just educational purposes. We're not trying to encourage you to invest or trade or anything. That has to be your decision. And of course, you should carefully consider the risks, definitely your financial situation, more importantly, your level of experience, and of course, only risk capital you're prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice and do that before you start to trade. Symax Fintech, our services, anything to do with trading, we're all over it. We do provide a daily newsletter, which does include global news. You can also get chart levels and my views as well in the premium service. We do provide one-day workshops, one-week courses. Then we do the extended master classes. We're even doing an accredited course there. Trader mentoring to help people constantly reach the next level in their trading. And of course, we do consulting on various aspects of trading. There's our details to contact us, info@symaxfintech.com. So any questions, anything whatsoever, observations, anything you'd like to see in what we're doing, please let us know. We're happy to hear from you and appreciate any comments. So now we're going to go on and there's the next part, which is part 2, which is all about the technical analysis, including some nice charts, etc. So hopefully you'll stay with us for that. Just go to part 2 and it will be there. Thanks for listening.